to you.
Looking at the market, like I said, pretty muted at this stage. Could this public holiday that's coming up on Monday have anything to do with it?
You know, the market's been in a strong bull trend through 2012. I think it's about the NSE 20 index is 2% below its 2012 and 12-month closing high. As you noted, the trading has become a little bit muted. I think we've got a slew of results. But I think we're going to see quite a sharp rally into year-end once this sort of process of rotation ends. And I think that's going to end a little bit after the holiday, as you note. But the market remains firmly underpinned, mostly driven by foreign investors. And I think I still see them having an increased appetite for sub-Saharan African equity. I
was about to ask you about the foreign investor activity. They bought about 47.7% and only sold about 20%. So is this the type of direction they will be taking for the rest of the year, do you think?
Mashudu, they've been taking this all through the year. They've been net buyers, and I think it's been pretty much the narrative across sub-Saharan Africa. The Kenyan retail investor has been sidelined, and it's the foreign investor element which has lifted the stock market here, Nigeria and South Africa, I'm sure, as well. And I continue to see that trend continuing. The retail shareholder in Kenya who marched into the stock market in a huge way with all those IPOs which culminated with Safaricom remain sidelined. I think in order to ignite retail interest, the government has to sell a big flagship IPO at a steep discount. And so far, there's no sign of that happening. It's relatively easy to do, but there doesn't seem to be the determination to do that. So for now, heavily dependent on foreign investors, expecting local institutional money to take up a bigger position because they're seriously underperforming the benchmark returns this year, but they've yet to come in a big way.
Let's look at stocks in the power sector. Who's possibly driving that? We've got Kenyan and Kenya Power in positive territory. We had those two stocks up in yesterday's trading session, really with market participants saying this is all ahead of the year-end results. What kind of results can we see coming out of the power sector?
Well, you know, the power sector has been underperforming the wider stock market. I think Kenyan is unchanged through 2012. KPLC is probably in the same area. And in particular, I think something like Kenyan looks very interesting to me now. They accelerated first half results 33%. I expect them to have accelerated further. It's trading on a single-digit PE. And something like Kenyan is all about a cost push-through. So what we're seeing now with Kenyan is a big bulking up in electricity capacity and generation, predominantly via geothermal. The issue around Kenyan was the execution risk. Were they going to be able to raise these big slugs of capital in order to execute their business plan? We've seen evidence of the fact that they are able to do that with the recent launch of Olkaria 4 and a geothermal facility near Naivasha. So I, for one, I'm quite bullish on Kenyan. I can see it rallying to about 10 shillings, which gives us about a 20% return from here through year end. And I think it remains cheap even after that predicted rally, in fact. KPLC is interesting as well, but I'm more excited by Kenyan than KPLC.
Let's move on to another sector. Looking at the media sector, we have a Nation Media. That stock was also up in yesterday's trading session. Investors saying that this international money transfer service likely to boost its earnings going forward. Are you also buying into the story?
Yes, I am, very much so. I think, you know, it's interesting to contrast Nation versus Standard Media. Nation is outperforming total return this year, about 40%. Standard Media flat on the year. They've really been executing well. I was at the half-year results release. It looked extremely strong. I like this money transfer business. You know, bear in mind that the entire diaspora lands on their website once a day, practically. So they're leveraging those eyeballs. They're looking to increase the product pipeline to those eyeballs. And I think this is a win-win for Nation and for Diamond Trust. And particularly, I think Nation has some very exciting real estate. When you drill into their earnings, they saw some really good numbers. And NTV Uganda was up like 650%. Digital revenues up 100% year on year, admittedly from a low base. Lots of good media real estate, which is being sweated much harder. I'm bullish about that stock, looking for a move through 200 over the next 2 or 3 months.
How about a stock like Scan Group? We have Scan Group hitting a 20-month high in yesterday's trading session. Are you also liking a stock like Scan Group? We know that it plays within the advertising space in Kenya.
Correct. It's the dominant player in East Africa. I don't see it being able to extract more value in terms of market share. I think revenue share is going to flatline a little bit in East Africa. But I think the interesting story about Scan Group is the replication of the model across sub-Saharan Africa. Mr. Thakra is opening or has opened offices in Ghana, Nigeria, Angola, Mozambique. He's riding a rising tide of multinational spend across sub-Saharan Africa, and there's a lot of multinational business in his portfolio, likes of Nestle, likes of Diageo, and I expect the share price to continue to perform. It's the only pure play, advertising pure play listed in East Africa, and I think he's going to be successful in rolling this model across the sub-Saharan African continent. So yes, I think it's a positive story going higher.
Going higher for Scan Group. Let's look at the fixed income market now. We have seen rates on the 10-year bond yields hitting a 2012 low. Rates seem to be coming down. We also have interbank rates also falling. They were sitting about 8.8% in yesterday's trading session. Are you seeing these rates are falling even further at this stage?
Yes, I think the East African bond market was a free lunch early in the year when inflation was near its cycle highs. But I think there's still more room for easing rates and appreciation of prices in the bond market. When you compare the rates of interest you're receiving here to anywhere else in the world, you look at the beta around the currency and you've got to say that, risk reward, it remains attractive. I think inflation rates will continue to ease. Last time we were at 7.74%. I expect a further easing in that. And I think we'll continue to see a continued rally in bond prices. And furthermore, the shilling will remain well behaved. And I think this will be very supportive also for the equity market. So yes, I think it remains bullish on the fixed income front as well.